Hello and welcome back to Investing for Generations, your channel for high-quality stock research for long-term value investor. And today I want to analyze a stock which I never heard about before and I never saw another video about that. It's a hidden champion out of a not very popular sector and it seems well undervalued. So if you are interested in undervalued businesses for the long term, then you are right here, and let's jump into the analysis. And the company I want to analyze today comes from the wood and lumber production, and this is the logo. I don't know if anyone know which company that is. It is UFP Industries. UFP Industries is traded right now at $69 with a market capitalization of 4.3 billion, a PE ratio of 17 and a forward dividend yield of 0.88%. UFP Industries was founded in 1955 and is headquartered in Grand Rapids, Michigan. They have over 170 operations, which supplies tens of thousands of products to three markets: retail, construction, and industrial. The businesses are operated and managed by over 14,000 people around the globe. They had a revenue in 2020 of 5.2 billion. They operate foremost in North America, in the States and Canada, but also in the United Kingdom, Italy, and also in Asia and Australia. Their revenue foremost come from the retail sector, followed by the construction sector, industrial sector, and a little bit of their international business. They have three business segments: is a retail solutions, the construction, and the industrial sector. And what I really like with the company is when their management is stick for a long time. And when we look at the higher management of UFP, and when we look at the chairman of the board, he joined the company in 1971, and also the current CEO is there from 1996. So they stick a long time with the company, and this I really like. I like stable companies, also stable in the management. With that, just take a look at the financial numbers of UFP. And therefore, as always, go to macrotrends.net and start with the revenue. The revenue over the last 5 years grow from $2.88 billion to currently $5.15 billion. So it grew quite a bit, not very fast, but very stable, very steady. And also the EPS, the earnings per share, grow from $1.33 to currently $4 over the last 5 years. Also here, very steady growth in the earnings. When we look at the return of investment, then we see over the last 5 years the return on investment all the time was over 10%, and currently we are at 14%. So this is a good number, not spectacular, but good. And also the return on equity is over the last 5 years over 10% and currently at 17%. Also that, not great, but quite solid. And also when we look at the free cash flows over the last 5 years, they grew from $2.14, then it was a little bit less, but still profitable all the time, to currently $4.18. And then also take a look at the debt equity ratio on the balance sheet. The long-term debt is only 0.31 billion and the shareholder equity is 1.48 billion. So we come to a debt equity ratio of 0.21. Very solid, just as I like it. And so we have a very solid company here with a very good balance sheet, very clean balance sheet, high profitable in a still growing market. Yahoo Finance estimate a growth rate over the next 5 years of 17%, which is quite a lot in my view. And I don't know if they really can reach that, but it seems like the whole market is still growing. But of course, as always, when I analyze a company, of course I look for a good, stable, profitable company. but then before I invest in a company, I also have to calculate the intrinsic value to know if the business is to buy on a reasonable price right now, or even better, undervalued. And therefore, let's go and calculate the intrinsic value. And therefore, as always, I go to the Excel sheet of Sven Carlin, the best YouTuber in the financial sector, and you can download this Excel sheet on his research platform. I put the link down in the description. And to calculate the intrinsic value, we need first and foremost the earnings, the current earnings of $4, and then the growth rate for the next 5 years and for the years 6 to 10. Yahoo Finance estimated 17% growth over the next 5 years. This is too optimistic for me, so I put here 10%, and then for the years 6 to 10, 8%. This is quite conservative, I would say, but better this, and then you automatically have a little bit of margin of safety, even if you are conservative with the growth rates. And then I put my discount rate as always 12%. This is my expected return for investments in the stock market, and a terminal multiplier of 20. This is, I think, reasonable, and so this scenario is quite likely. And when you calculate this together, then you come to an intrinsic value of $91.80. Of course, if you have a best case scenario with the estimated 17%, and then maybe for the year 6 to 10, 10%, and a little bit higher terminal multiply, then you come to a way higher intrinsic value of $149. And let's say we look at the normal case scenario with intrinsic value of $91 and compare that to the current price of $69, then we see that it seems like UFP Industries is undervalued, and quite a bit undervalued. This is really, really interesting, and I will put UFP Industries on my watch list. I like the business, I like the stability in the business and the profitability, and also in the overall so overvalued market, it seems like there is one hidden champion which seems undervalued. And if the price maybe come back a little bit more, I really think about to take a position in UFP Industries, because it would fit my long-term North American portfolio very good, which is full of very stable, profitable businesses, and UFP Industries would fit very good into this portfolio. And so I'm very happy I found them. As I said, I will put them on my watch list very high, and maybe sooner or later I will buy a position in this great company. And if you like this whole idea of long-term value investment, and if you like the transparency of my portfolio, because you get a weekly update on this portfolio with all the transactions, and by the way, you also find deeper analyses to all of these companies in my portfolio on my channel, then please like this video, share the video, subscribe to my channel, and you will never miss another analysis, and every weekend my insight to my real money portfolio. And then we see the next time with another video, another analysis of another great stock. See you then. Take care. Bye bye.